All right, if you're a parent in Canada, there is one acronym you absolutely need to know: RESP. It stands for Registered Education Savings Plan. And today, we're going to break it all down. We're going to look at what it is, how it works, and most importantly, how it can make a massive difference for your child's future. So let's dive in.
But hey, before we get into the solution, we have to talk about the problem. I want you to really think about this for a second. Are you ready for the cost of post-secondary education? Because it's not just some big number way off in the future. It's a moving target. And honestly, it gets a little more intimidating every single year.
And that really gets to the heart of why the RSP was created in the first place. This isn't just about a feeling of being under pressure. The numbers themselves tell a very, very clear story. You know, it's so easy to get fixated on just the tuition fees, right? But that's really only the tip of the iceberg. The real cost includes everything else. We're talking textbooks, rent, food, transportation, all of it. When you add all that up, the final number can be a real shock to the system. So, with a challenge that big, what's the best tool for the job? Well, let's introduce the solution that was specifically built to handle this: the RSP. So here's the official definition. An RSP isn't just another savings account. That word registered is the key. It means the government has given it some special powers. And the two most important powers to remember are how it deals with taxes and, my personal favorite, the free money it gets you from the government. Let's dig into these advantages. First, tax-deferred growth. Think about it like this. In a regular investment account, you're paying taxes on your gains every year, which kind of slows things down. In an RSP, those taxes are put on hold, which lets your money grow and compound way more powerfully over time. But as awesome as that is, the second point, well, that's the real showstopper. This is, hands down, the single biggest reason to open an RSSP. It's the one feature that makes it completely different from any other way you could possibly save for education.
The idea here is actually super simple. It's like a government match on your savings. For every dollar you put in, up to a certain limit, the government throws in its own money right alongside yours. It's basically an instant bonus. This is called the Canada Education Savings Grant, or the CESG for short.
So what does this actually look like in practice? Let's follow the money. Imagine you decide you're going to contribute some cash this year. Let's say you contribute $2,500. Now, you're going to want to remember this number because it's kind of the magic number that gets you the most bang for your buck from the government each year. The second your contribution hits that account, the government automatically jumps in. They kick in a grant that's equal to 20% of whatever you just deposited. Which means, boom, an extra $500 just appears in your child's RSP. That comes straight from the government. It is literally free money just for using the right account. Think about that. It's a guaranteed 20% return on your money before you've even invested it. And get this, it's not a one-time thing. You can get this grant year after year. Over the lifetime of the RSP, the government will chip in up to a maximum of $7,200 for each child. That is a huge helping hand. So, what about your side of things? Is there a limit on what you can contribute? Yep, there's a lifetime limit for you as well, and it's $50,000 per child. And just to be crystal clear, that's your money. The government grants we just talked about are extra, right on top of this amount. Okay, let's fast forward. You've been saving for years, the account has grown nicely, and your child gets that acceptance letter to college or university. Awesome. So, now what? How do you actually get the money out to pay for all those expenses? This part of their RSP is actually pretty brilliant. The money comes out in two separate streams. First, on the left, you have all your original contributions. That money comes right back to you, the parent, completely tax-free. It's just you getting your own money back. Simple. Then, on the right, you have everything else. All the government grant money plus all the investment growth. This gets paid out to the student. And technically, it counts as their taxable income. But here's the genius part. Most students have little to no other income and have tuition tax credits, so they often end up paying very little or even zero tax on it. All right, let's talk about the elephant in the room. This is the number one question, the biggest fear that parents have about RSPs. What in the world happens if my kid doesn't go to school? So let's just tackle this head on because it's a completely valid concern. After all those years of saving, what if they choose a different path? Is all that money just gone? The short answer is absolutely not. You have options. Here's exactly how it breaks down. First, your contributions. Every single dollar you put in, it comes right back to you. Tax-free, it's your money. You get it back. Period. Second, the government grants. That money just goes back to the government. No harm, no foul. And that leaves the third piece of the pie, all the investment growth that's built up over all those years. Okay, so with those investment earnings, which are called an accumulated income payment, you basically have two choices. Your first option is to just take it as cash. But, and this is a big but, it gets taxed at your regular income tax rate, plus an extra 20% penalty. Ouch. The much, much smarter move if you have the RRSP contribution room is to transfer those earnings directly into your own RRSP. If you do that, it's tax-free, you avoid that nasty penalty, and you seamlessly turn what was your child's education fund into a nice little boost for your retirement. Whew. Okay, we have covered a lot of ground here. So what are the most important things to remember? Let's just do a quick recap. When you put it all together, you see that the RSBS is so much more than a savings account. It's a whole strategy. It creates discipline by giving you a specific goal. It supercharges your savings with tax-deferred growth. The government literally gives you thousands of dollars of free money. And, crucially, it's flexible enough to handle life's curveballs. It really is like a Swiss Army knife for education savings. And that brings us to our final question. And this one's for you to think about. When you look at the reality of rising education costs on one hand and the powerful, unique benefits of this plan on the other, could an RSP be the right first step for your family's future? It's definitely a question worth asking.